All right, let's talk about India's economy. You see the headlines, you hear the buzz, but today we're going to dig a little deeper. We're going to look past that big, shiny number and ask what's really going on under the hood.
And there it is, $3.8 trillion. That is the official headline number. And look, it's a huge deal. It puts India on the map as the fourth largest economy in the world. I mean, that is an absolutely massive achievement.
And of course, the story you hear everywhere is that it's the world's fastest growing major economy, right? An absolute powerhouse just rocketing forward. That's the official narrative, the one we all know.
But is that really the whole picture? You know, whenever you see these incredible, almost unbelievable numbers, you gotta ask, right? Is there something more to it? So, yeah, let's get into it.
Okay, so where do we even begin? Let's start with the very foundation of that booming economy story. And, well, let's see if we can find any cracks. And wow, right off the bat, we hit a pretty major red flag. And look, this isn't just some random analyst with a blog. This is coming straight from the International Monetary Fund, the IMF. They're basically one of the top financial referees on the planet, and they've gone on record saying they have serious questions about how credible India's economic data really is.
So what's their beef exactly? Well, it gets a little technical, but stick with me. First, the main calculations. They're based on a picture of the economy from way back in 2011-12. That's ancient in economic terms. The numbers they use for inflation? Just as old. And then there are these weird gaps where the amount of stuff the country says it's making doesn't quite line up with what people are supposedly buying. Long story short, the entire foundation the numbers are built on, it's pretty shaky.
And that shakiness brings us to what might be the biggest issue of all, a huge structural piece of the puzzle that some economists, like a guy named Arun Kumar, think is throwing the whole thing way off.
So, what is it? It all boils down to something called the unorganized sector. And trust me, this is not some small, forgotten corner of the economy. It's massive. We're talking about all the little local shops, the millions of street vendors, the daily wage laborers, all the people who make the economy tick at the ground level. This is the lifeblood for a huge chunk of the country. But here's the kicker. It's almost completely invisible to the official government bean counters.
And this is where it gets really, really interesting. There's a giant assumption, a leap of faith, really, baked right into the official GDP numbers. See, because the government can't easily track this huge unorganized sector, they just assume. They assume it's growing at the exact same rate as the big, shiny corporate sector that they can track easily.
Okay, so you see where this is going, right? That leads to the billion, or maybe trillion-dollar question. What if that assumption is dead wrong? What happens if the big corporations are doing great, but that massive, unorganized sector? What if it's actually been shrinking?
And that's not just a hypothetical. According to economists like Kumar, this part of the economy, which runs on cash and personal connections, has been hammered by four massive shocks. Think about it. Demonetization in 2016, which pulled cash out of the system overnight. A messy new tax system rollout. A major credit crisis. And then, of course, the global pandemic. Each one of these was like a body blow specifically to these small, informal businesses.
And this right here, this is the heart of the problem. As we all started buying more stuff online and going to big shopping malls, the organized sector, the big companies, they boomed. But that business had to come from somewhere, right? It often came directly from the pockets of those small local shops. So you've got this wild situation where the government is using the growth of one group as a stand-in for another group that is actively being hurt by that very same growth. It's a recipe for a totally warped view of reality.
So let's follow this logic and see just how different the conclusion can be when you factor this in.
And this isn't just a guess. Kumar actually did the math. His analysis suggests that the unorganized sector hasn't just been struggling, it's been shrinking by something like 5 to 9% every single year.
And here's the payoff, the big reveal. You take that decline into account and the entire picture just flips on its head. The official story? A $3.8 trillion economy, number 4 in the world. But Kumar's analysis? It suggests the real number is closer to $2.5 trillion. Still big, for sure, but that drops India down to the 7th largest.
Let's just put one number on this to let it sink in. The argument is that since 2016, the economy has been overestimated by a mind-blowing 48%, almost double what it might actually be. The key takeaway here is just how massive that gap is between the headline and this other potential reality.
Okay, so at this point you might be thinking, all right, interesting numbers, but so what? Why should I care about some nerdy debate between economists?
Well, because it might just explain a weird feeling a lot of us have had about our own finances.
You ever look at the news and see the stock market is soaring, breaking records, and then you look at your own bank account or portfolio and think, I'm not really feeling it. Yeah, that feeling, it's not just you. And this whole two-track economy thing could be exactly why. It's pretty simple, really. The stock market is basically a scoreboard for a few dozen huge, organized companies, and they can be doing fantastically well even if the rest of the economy is just treading water. If the huge majority of people, the ones in that unorganized sector, have less money to spend, then overall demand gets weak. So all the wealth gets concentrated with those big players at the top, and you get a stock market that looks amazing but doesn't tell the story for most normal people.
And if you need one visual to really hammer this home, here it is. That unorganized sector, the one that might be shrinking, that's not some fringe group. That's where 90% of the Indian workforce makes their living. 90%.
So what we're left with is this incredible tale of two Indias, two completely different sets of numbers painting two totally different realities. And that brings us to one last really important question. Look, at the end of the day, economic numbers are supposed to be like a map, right? They help everyone, governments, investors, you and me, figure out where we are and where we're going. But if the map you're using might be wrong, and not just by a little bit, but by nearly half, then how on earth can anyone navigate the territory safely? And that, really, is the $3.8 trillion question. Thanks for joining me on this one.